Now it's time for our market update with Catherine Murray, host of the Buck Stops here. Over to you, Catherine.
Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing mixed North American equity markets today. That does follow a big rebound on Thursday and a bit of a sell-off on Wednesday. U.S. markets look to be gaining on the week, whereas the TSX looks to be relatively unchanged. As we look at those U.S. markets, a couple points to make. It seems as though they are really quite resilient. They've been up by about 20% over the past 3 months. The reason perhaps for that is better than expected economic data. And we saw that once again today with the U.S. jobs numbers surging, coming in up 355,000 versus expectations of 185,000. So a big blowout number in the U.S. jobs numbers today. And that, again, continues to give support for the broader markets. Also in focus, we had big tech earnings rounding out the picture: Apple, Amazon, as well as Meta, which, of course, is the owner of Facebook, all coming in better than expected. A little bit different, though, in terms of stock price reaction. Starting with Meta, again, the owner of Facebook, that stock is up by 21% today, following a very strong quarter and really seeing some nice momentum behind their company initiatives. We're also seeing Amazon stock up by about 7% today, also coming in better than expected, and also seeing some nice guidance going forward. That's always important. Apple, on the other hand, their guidance for the March quarter was a little bit softer on the sales side due to China versus expectations. So that stock is down close to 1%. I think that was somewhat expected. The results for the quarter did come in better than expected. So taken together, some strong earnings, which again, very supportive for the broader markets. Away from that, we're also seeing some of the major oil companies, Exxon as well as Chevron, higher on the day. And also in focus in the United States, it was a busy week. The U.S. Federal Reserve did have their 2-day meeting, no change to their overnight rate. But we did get some pushback from Fed Chair Jerome Powell, indicating that March is not likely the time period with which we'll see a rate cut. And many strategists on Wall Street were actually expecting a rate cut during the March time period. So many today are pushing back those expectations. Another important note in the markets this week were the regional banks under some significant pressure, still feeling the pressure of higher rates on their balance sheets, and some of those stocks were under significant pressure, as I mentioned. So a little bit of concern out there in terms of regional bank contagion. As we take a look at the TSX, as I mentioned, it is relatively unchanged on the week, trading a little bit lower today with some pressure on the miners following the price of metal lower. We also did see the price of WTI down by about 2%, or watching that down by about 2% today, and the Canadian dollar also lower versus the US dollar. We did have a rebound in the TSX yesterday, somewhat similar to what we saw in the U.S. markets. Away from that, the Bank of Canada did make some comments in front of the House Finance Committee and indicated that they cannot solve the housing crisis by interest rates. So we know that it is a supply issue, and that does put pressure, of course, on Ottawa to fix some of the regulations surrounding the lack of supply. As well as we look at the Canadian market, we did have GDP report this week, and it did come in a little bit better than expected. 0.2% growth here in Canada, not a lot, but it was a little bit better than what the Bank of Canada has been indicating, which is for flat or 0% or no growth. So that probably eases the pressure on the Bank of Canada to cut rates. Away from that, on the earnings front, Imperial Oil perhaps is a standout. That stock up a little bit on the back of their better than expected results. And TD did downgrade BCE today, and also from a buy to a hold, and lowered the price target from 57 down to 55. Away from that, in politics, perhaps to note, the Toronto mayor did raise property taxes by 9.5%. But that was a little bit lower than the initial proposal. We've also heard that there was a delay in the Trans Mountain Pipeline expansion. So that is something that will put a little bit of pressure on Ottawa, in addition to Ottawa wanting to sell the Trans Mountain Pipeline. Keep in mind that when they bought it from Kinder Morgan, expectations were that the cost would be about $5.4 billion. They had major cost overruns, taxpayer money, to the tune of $30 billion. A lot going on in the markets this week, and have a great weekend. We'll see you next week. Back to you.